All right. Good morning, everybody. Happy Friday. It is August 25th. Markets are currently off to a slightly green start, looking to trade some NVIDIA calls, the 490 strike, with NVIDIA right now at that 470 level. I thought it would act as support, but it looks like it's dipping below it at the moment. And then looking to take some Amazon shorts as well. Let's see. Amazon with the stop loss at 133.75, about $1 away from it right now. We'll copy this one. It's the 131 put I'm looking at for next week's expiration. Let's check the delta for it. That's not what I have. Amazon. Delta for this option is 35, 75 cents of 35 will be 25 loss per contract, so we'll open 4 of them. $0.25 a contract, okay. Trading at 140 right now, so our stop loss will be at 115. Let's see. Not sure what my price on those were. I'm assuming 140. Let's check the monitor tab. I'm going for 143 at the moment. I actually got a better price, 138. A little bit under 138. When is Powell's speech going to be? I think it's at 10:05 actually, if I remember right. I was also looking to short Microsoft too. Stop loss for this order would be at 322 or 323.50, which is $1.75 away. So that's almost 2 delta, which is quite a bit of risk. But NVIDIA, I don't think this is a good long opportunity anymore. It definitely lost that support that it had before. Well, let's look at this 315 Microsoft put. Check the delta on it. 27, so basically 30 delta. Right now it's trading at 322 and our stop is at 323.50. So we're risking about 45 a contract. We'll open just 2 of them for right now. 45 a contract, they're trading for 200, or so our stop will be at 165. Got those at 202. Let's see what's leading the market. NVIDIA's leading the downside, 1.5% for the day. Netflix leading the upside, up 2% for the day. Netflix took a pretty big beating yesterday, so that might be why it's trending down. Or trending up, sorry. Microsoft getting stuck at about 322 right now. Topped out at 322.70. And kind of running into this resistance here. again, my stop is at 323.50. As the Amazons are printing a little bit, going up to 160 a piece. What price did we get them? 138. Might add another position to Microsoft. It's about $1 off my stop. Delta for the 315s is 26. So we risk another $26. They're trading at 190. Got it at 192. Bought another Microsoft put at 192. 1.9 minus 25 cents is 165 as our stop. $1.65. So we remember that. And our stop for Amazon's $1 higher. Delta for these options is 36. Trading at 150. So stop loss at 115 for these options. At or below 115. Show price on the right. There we go. Microsoft I would like to see down at like 321. Amazon doesn't have any support besides the after hour lows from yesterday at like 131.50. Looks like Microsoft peeking its head into this range again. Yesterday, that 322 level was a bit tricky. Just kept flashing between 321 and 322 at the end of the day. But at the close, it flushed down to 320. So we'll see how today goes. All right. Any 0-day expirations for today? I don't have any. I just feel like 0 days too risky for my taste because the stop losses can get hit super quick. Although you can kind of try to balance that out with like spread options and just be all in or all out. That's one way that you can kind of mitigate the risk of 0 days. I might take, I think, a bullish trade before Powell's speech, probably on like QQQ or something simple, and risk like 100 for it. Because I think that we've seen a lot of selling going into it, and I think that it's probably overblown. Mark my entry. It's at 198. Stop is at 165. And then for Amazon, my entry was 138. Stops at 115. Right at break even for the Microsofts and a little bit better for Amazon right now. Markets just kind of seem indecisive ahead of Powell's speech in about 20 minutes. Kind of getting a little bit of upside here. Nvidia's actually back in the green to 472 from 465 earlier. I'm going to pull up Powell in the meantime. We'll go through the rest of the watch list, see if there's any long opportunities we can take. Nvidia looking pretty good. $4.90 strike price. Let's see what the delta value for that option is. Looks like I'm hitting my stop on the Microsoft trade. Or close to my stop at least. Looks like I touched my stop and pulled right back. I'll buy one. I meant to buy one more, but I bought two. So now we got 5. That should have brought the average cost down pretty significantly since we got 2 of them. Now it's at, let's see, trade price. Can't find my trade price for the option. Microsoft. Trade price is now at 192. I'm gonna hold the positions while Powell speaks. I'm hoping not to, or at least scale out of the positions before he speaks. But right now the markets are just kind of flattened up when I have two puts. Yes, puts on Microsoft at the moment. Let me actually pull Powell up in the meantime. Get the audio set up too. Starts in 8 minutes. Do I ever do strangles into the day? Not really. I'm usually just taking one direction or the other. It'd be too hard to manage my stop losses if I had a strangle, I feel like. I have long-term shares, but that's about it in terms of long-term trades. Sometimes I'll take a gold position if the price is right. Like a leaps option on GLD or something like that. But my main focus lately has just been day trading in these ranges that you see on the screen up top. Alright, should have Powell in 5 minutes. Make sure the audio output's on. Alright, 168, 166. Right on my stop, or close to. As soon as I see 165, out of that. Might get back into the position if it rejects at 130 or 123.50. Yeah, I'm using OBS. Okay, it looks like a pretty solid rejection there. So I'll get 5 more reposition at 171. How much margin am I using? I'm just using cash for these trades. I have about 13,000 cash in this account, so I don't need to use margin in order to spend $1,000 on some puts. What do I think of Tesla? It's the biggest gainer today, up 1.8%, so that's pretty good. I'm about to make our money back on Microsoft. I really want to see it to the bottom of this range. It's still about 25 cents off of it. And it just wants to go back to the middle. Powell's about to speak in 2 minutes, so hopefully we can get this a little bit more. I'm surprised implied volatility is going down right now. You'd think that Ivy would be amplifying before Powell's speech. Yeah, very strange chance. Could be a bottom in IV, which means that the markets would head down, but we'll see. You think it's a make or break moment for the market? I think that it's probably going to be bullish, honestly, but still have bearish positions anyway, just based on the prices. Spreads are getting real wide. That's ugly. Powell should start speaking now. I'm not hearing anything. Usually it takes him like 5 minutes to come on in anyway. Yeah. I think it was supposed to be at 10:05. Yeah, he's got to let everybody know what trades to take before his speech. He's got to let Nancy in on what options to buy. Yeah, they're all available. We're pushing that high for Microsoft. There we go. Getting some audio feed. Event will begin soon. Okay. Great. All right. Got stopped out for Microsoft again. Oh.
Moving sustainably down toward our objective. Today, I will review our progress so far and discuss the outlook and the uncertainties we face as we pursue our dual mandate goals. I will conclude with a summary of what this means for policy. Given how far we have come, at upcoming meetings, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. The ongoing episode of high inflation initially emerged from a collision between very strong demand and pandemic-constrained supply. By the time the FOMC raised the policy rate in March 2022, it was clear that bringing down inflation would depend on both the unwinding of the unprecedented pandemic-related demand and supply distortions and on our tightening of monetary policy, which would slow the growth of aggregate demand, allowing supply time to catch up. While these two forces are now working together to bring down inflation, the process still has a long way to go, even with the more favorable recent readings. On a 12-month basis, U.S. total or headline PCE inflation peaked at 7% in June 2022 and declined to 3.3% as of July, following a trajectory roughly in line with global trends. The effects of Russia's war against Ukraine have been a primary driver of the changes in headline inflation around the world since early 2022. Headline inflation is what households and businesses experience most directly, so this decline is very good news. But food and energy prices are influenced by global factors that remain volatile and can provide a misleading signal of where inflation is headed. And in my remaining comments, I will focus on core PCE inflation, which omits the food and energy components. On a 12-month basis, core PCE inflation peaked at 5.4% in February 2022 and declined gradually to 4.3% in July. The lower monthly readings for core inflation in June and July were welcome, but 2 months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. We can't yet know the extent to which these lower readings will continue or where underlying inflation will settle over coming quarters. 12-month core inflation is still elevated, and there is substantial further ground to cover to get back to price stability. To understand the factors that will likely drive further progress, it is useful to separately examine the three broad components of core PCE inflation: inflation for goods, for housing services, and for all other services, sometimes referred to as non-housing services. Core goods inflation has fallen sharply, particularly for durable goods, as both tighter monetary policy and the slow unwinding of supply and demand dislocations are bringing it down. The motor vehicle sector provides a good illustration. Earlier in the pandemic, demand for vehicles rose sharply, supported by low interest rates, fiscal transfers, curtailed spending on in-person services, and shifts in preference away from using public transportation and from living in cities. But because of a shortage of semiconductors, vehicle supply actually fell. Vehicle prices spiked, and a large pool of pent-up demand emerged. As the pandemic and its effects have waned, production and inventories have grown and supply has improved. At the same time, higher interest rates have weighed on demand. Interest rates on auto loans have nearly doubled since early last year, and customers report feeling the effect of higher rates on affordability. On net, motor vehicle inflation has declined sharply because of the combined effects of these supply and demand factors. Similar dynamics are playing out for core goods inflation overall. As they do, the effects of monetary restraint should show through more fully over time. Core goods prices fell the last 2 months, but on a 12-month basis, core goods inflation remains well above its pre-pandemic level. Sustained progress is needed, and restrictive monetary policy is called for to achieve that progress. In the highly interest-sensitive housing sector, the effects of monetary policy became apparent soon after liftoff. Mortgage rates doubled over the course of 2022, causing housing starts and sales to fall and house price growth to plummet. Growth in market rents soon peaked and then steadily declined. Measured housing services inflation lagged these changes, as is typical, but has recently begun to fall. This inflation metric reflects rents paid by all tenants, as well as estimates of the equivalent rents that could be earned from homes that are owner-occupied. Because leases turn over slowly, it takes time for a decline in market rent growth to work its way into the overall inflation measure. The market rent slowdown has only recently begun to show through to that measure. The slowing growth in rents for new leases over roughly the past year can be thought of as in the pipeline and will affect measured housing services inflation over the coming year. Going forward, if market rent growth settles near pre-pandemic levels, housing services inflation should decline toward its pre-pandemic level as well, and we will continue to watch the market rent data closely for a signal of the upside and downside risks to housing services inflation. The final category, non-housing services, accounts for over half of the core PCE index and includes a broad range of services, such as healthcare, food services, transportation, and accommodations. 12-month inflation in this sector has moved sideways since liftoff. Inflation measured over the past 3 and 6 months has declined, however, which is encouraging. Part of the reason for the modest decline of non-housing services inflation so far is that many of these services were less affected by global supply chain bottlenecks and are generally thought to be less interest sensitive than other sectors, such as housing or durable goods. Production of these services is also relatively labor-intensive, and the labor market remains tight. Given the size of this sector, some further progress here will be essential in restoring price stability. Over time, restrictive monetary policy will help bring aggregate supply and demand back into better balance, reducing inflationary pressures in this key sector. Turning then to the outlook, although further unwinding of pandemic-related distortions should continue to put some downward pressure on inflation, restrictive monetary policy will likely play an increasingly important role. Getting inflation sustainably back down to 2% is expected to require a period of below-trend economic growth, as well as some softening in labor market conditions. Restrictive monetary policy has tightened financial conditions, supporting the expectation of below-trend growth. Since last year's symposium, the 2-year real yield is up about 250 basis points, and longer-term real yields are higher as well by nearly 150 basis points. Beyond changes in interest rates, bank lending standards have tightened, and loan growth has slowed sharply. Such a tightening of broad financial conditions typically contributes to a slowing in the growth of economic activity, and there is evidence of that in this cycle as well. For example, growth in industrial production has slowed, and the amount spent on residential investment has declined in each of the past 5 quarters. But we are attentive to signs that the economy may not be cooling as expected. So far this year, GDP growth has come in above expectations and above its longer-run trend, and recent readings on consumer spending have been especially robust. In addition, after decelerating sharply over the past 18 months, the housing sector is showing signs of picking back up. Additional evidence of persistently above-trend growth could put further progress on inflation at risk and could warrant further tightening of monetary policy. The rebalancing of the labor market has continued over the past year but remains incomplete. Labor supply has improved, driven by stronger participation among workers aged 25 to 54 and by an increase in immigration back toward pre-pandemic levels. Indeed, the labor force participation rate of women in their prime working years reached an all-time high in June. Demand for labor has moderated as well. Job openings remain high but are trending lower. Payroll job growth has slowed significantly. Total hours worked has been flat over the past 6 months, and the average work week has declined to the lower end of its pre-pandemic range, reflecting a gradual normalization in labor market conditions. This rebalancing has eased wage pressures. Wage growth across a range of measures continues to slow, albeit gradually. While nominal wage growth must ultimately slow to a rate that is consistent with 2% inflation, what matters for households is real wage growth. Even as nominal wage growth has slowed, real wage growth has been increasing as inflation has fallen. We expect this labor market rebalancing to continue. Evidence that the tightness in the labor market is no longer easing could also call for a monetary policy response. Turning to the path forward. 2% is and will remain our inflation target. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to that level over time. It is challenging, of course, to know in real time when such a stance has been achieved. There are some challenges that are common to all tightening cycles. For example, real interest rates are now positive and well above mainstream estimates of the neutral policy rate. We see the current stance of policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. But we cannot identify with certainty the neutral rate of interest, and thus there is always uncertainty about the precise level of monetary policy restraint. That assessment is further complicated by uncertainty about the duration of the lags with which monetary tightening affects economic activity and especially inflation. Since the symposium a year ago, the committee has raised the policy rate by 300 basis points, including 100 basis points over the past 7 months. And we have substantially reduced the size of our securities holdings. The wide range of estimates of these lags suggests that there may be significant further drag in the pipeline. Beyond these traditional sources of policy uncertainty, the supply and demand dislocations unique to this cycle raise further complications through their effects on inflation and labor market dynamics. For example, so far, job openings have declined substantially without increasing unemployment, a highly welcome but historically unusual result that appears to reflect large excess demand for labor. In addition, there is evidence that inflation has become more responsive to labor market tightness than was the case in recent decades. These changing dynamics may or may not persist, and this uncertainty underscores the need for agile policymaking. These uncertainties, both old and new, complicate our task of balancing the risk of tightening monetary policy too much against the risk of tightening too little. Doing too little could allow above target inflation to become entrenched and ultimately require monetary policy to wring more persistent inflation from the economy at a high cost to employment. Doing too much could also do unnecessary harm to the economy. As is often the case, we are navigating by the stars under cloudy skies. In such circumstances, risk management considerations are critical. At upcoming meetings, we will assess our progress based on the totality of the data and the evolving outlook and risks. Based on this assessment, we will proceed carefully as we decide whether to tighten further or instead to hold the policy rate constant and await further data. Restoring price stability is essential to achieving both sides of our dual mandate. We will need price stability to achieve a sustained period of strong labor market conditions that benefit all. And we will keep at it until the job is done. Thank you.
Folks. Not too much of a speech, kind of alluding to fears of a recession. To me, that's what it kind of seemed like last year. Obviously, was a complete opposite tone, where markets or the economy was doing really, really, really well, and now he's kind of expecting the opposite to that. Still in on the Amazon put right now. I got 5 of them at 131. Stop loss is going to be at 110. Currently trading at 121. I took profits on a couple of them earlier. Got them at 138 originally. I sold them at 170. If we get back to the bottom of this range, these would be about break even, I think. Basically, he was just saying that the economy is likely to slow down. He was saying how lending practices are getting a lot tighter than they were before because of the tightening cycle that they've done with raising interest rates as far as they've had. There's less banks that are lending out money, less consumers willing to take out loans at these high interest rates. Yeah. Yeah, I think we'll have a pretty serious issue with vehicle loans because people took out a shit ton of money on vehicles over the last couple of years and paying out the ass for vehicles, right? So now you're going to have a bunch of people that are upside down on their car loans with these high interest rates. I think it's going to be a mess, but No one can refinance their cars, yeah. I mean, I have an auto loan at, it's a used car whenever I bought it. And the loan is at like 4 or 5%. So what's the point of going in and buying a car with a, what, probably 8-10% interest rate now? No thanks. Yeah, 820 a month. I've seen people pay like fucking rent prices for vehicles, $1,000 or more, and that's just absurd to me. My car payment's $270. I got a 5-year loan. I bought it at like the bottom of whenever the pandemic was like in full effect in June of 2020. So I got my car very, very cheap. It's still at the same fucking price as it was 3 years ago, which is crazy to me. Yeah, but my car payment's 265, 270. I drive a Hyundai Sonata. I'm not out here driving a Lambo or anything special. Does YouTube pay me well? Um, it's okay. It's about $1,000 a month. Sometimes it's more, depending on how much content I was putting out. I was making at one point up to 1,800 whenever I was posting a long format video every week. But lately, the long format videos just haven't been performing as well as short format, like shorts, TikToks. But the problem with TikToks and short videos is that they don't make any fucking money. Like, you get paid like pennies per 1,000 views, whereas with my long formats, I would get paid like 40,000 for 1,000 views, or sorry, 40 for 1,000 views, not 40,000. That'd be crazy. But what's my dream car? I'd say GT3 RS. Don't worry about it. It is what it is. I've been making the money back with trading lately. I feel like when one income source is down, the other one has to pick up. Like whenever I was doing well on YouTube, the trading would be taking a hit. Now that YouTube's taking a hit, my trading is doing well. All right, these contracts are at 155. I bought them at 131. My stop loss was at 110. So now they're better than my stop loss away from it. I'll sell 2 of them at 160. Hopefully. Yeah. 159. Seeing red for the rest of the day. Let's see what the trend is. Looks like Tesla's still up 2%. Pulling back like a lot of other stocks are right now after Powell's speech. It seems like right after his speech ended, market started moving down. Meta's the biggest loser today, down 1%. This one's definitely on a downtrend. So this is going to be the market leader today. Probably going to go down. But we're seeing quite a bit of pull from Tesla. So I don't think we really have a trend just yet. You do for individual names. It's a bunch of chop for Amazon right now. Microsoft seems to be trending down. Nvidia still at 471, so that one's actually still holding up, interesting enough. I may take a long opportunity here if the markets keep chopping. And I was looking at the 490 call. Right now it's trading at 536. We'll check the delta on it. This is the 490 call. 30 delta. Oh, it's already trading at 470, so it's basically at the stop loss right now. All right, looks like markets are finally capitulating here. I'm seeing Amazon all the way down at 132. My options are going for 175 a piece, 170. Yeah, Nvidia's fighting that 470 level for its life. And Amazon seems to be trying to hold this 132 level for right now. It cracked that low, went just a little bit under at 131.90. I'd really like to see Amazon all the way down at, I think, 131.50 was the level I was hoping for. 50 cents lower delta for this option is 42 cents, so that would put it another 20 cents higher, which would be between 190 and 200 a piece. Looks like Tesla's coming down a bit from 2% to 1.7 now. Netflix pulling back. Let's see, Nvidia's still above 470. It comes right below it at like 469 and then gets bought back up. All right. The Amazon contracts are almost 180. Again, my take profits at 190. But that 132 level is being pretty sticky right now. Yeah, the whole market's kind of pulling back at least. Nvidia's still sticking with that 470 level. Let's see where the lows are at for Nvidia. Because it's coming like a little bit under. Yeah, like 469 is where it has a support instead of the 470 level exactly. Delta for this option again was at, I think it was 30 if I remember right. I'm going to try to buy it as close to 469 as I can and have a 30-cent stop loss. To 469.50. Dang it. Yeah, every time it's hitting like a little bit above 469 right now, it's going back. Tesla's back up 2%. All right. I'm going to test my luck here. No. There we go, through the 469 level. And it's gone. Did not open that trade. $4.50 a piece now instead of... Okay. We do have some lows right underneath it at like 467. I might just buy two of them, but it seems to be Getting low. All right. Right at the low there. Breaking it. Or at least touching. All right, my Amazon contracts are up a bit more at 180. Amazon's still trading at that 132 level. It's just stuck there right now. What's the lowest that this has gone this morning? 464. And then 462. It's at 467 right now. Let's check out this chart a little closer. They were at 490 before. Currently at 410. All right, I think I'm just gonna sell the Amazons because it's not doing anything at that 132 level. Sold those at 165. All right, I'm gonna get two of these. My limit order was 435. Right back to low. Trading at 400 apiece. Get one more at 400. 405 was my entry. Let's see what my trade price is now. Trade price is 420. Right at those previous lows. 465. I'll get one more and that'll be the last entry. 385 entry. So now we got 4. So now our trade price is 412. All right, I'll take my stop there at 350. 340. And it's right back to the morning lows. Amazon calls just went up to 190. I might take profit. I think I'll try to get a few more of these NVIDIAs. And that'll be the last one for today. No, right under the lows now. They're going for 330. Yeah. Definitely starting a downtrend. IV's going up. And it's trading right under the daily low. So we'll see if it's just stopping people out first or not. and then make our decision. I'll probably buy 2 of them. All right, these are trading 300. I'd say we're well under the lows now. Looks like the whole market shifted red. See if we have any short opportunities. Maybe Microsoft with a stop at 321. I was looking at the 315 puts this morning. Those worked once, but not the second time. Microsoft. Again, the stop loss would be at 321. It's trading at 320 basically right now. Delta for this option is, let's see, it's a 315 put, 30 delta. So I'll buy 3 of them. Trading for 260 right now, 250. So stop will be at 220. Got 3 at 257. Nvidia's all the way down at 460 now, down 2.5% today. And that's after their good earnings that they had. But yeah, right now, Microsoft's losing that 320 level that it closed at yesterday. The lows in the pre-market were down at 318. Or, sorry, after hours were 318.20. But if we can get that $1.50 drop, that should send these up by about 45 cents a pop. Put them at almost, or that should put them above 300, I would think. Seeing Nvidia down 2.7%, 2.8% now, well under 460, so that's definitely a trend there. Yeah, Meta's down 2.8%. Pretty rough day for them as well as Nvidia. All right, there we are at the 319 level now. Still riding the trade. Damn. Yeah, now Meta's down 3.3%. Nvidia's down 3.2%. So you definitely have a downtrend. Netflix is barely up now, only 0.4%. Downtrending there, downtrending for Tesla, Apple downtrending, Microsoft. Amazon's really bad. Google's really bad. Meta's really bad. And then Nvidia. All those downtrending like hell right now. guess Papa Powell did a good job. I feel like he did a good job in kind of instilling fears of recession. That's my main takeaway from it. But, I mean, if people don't know we're going into a recession, I feel like it's a bit late for them. Because we've had that idea for a really long time, ever since we had 2 negative quarters GDP. What was that, in 2022? But they didn't call it a recession because unemployment was still low. Nvidia's down to 453 now. Yeah, definitely glad I took that stop loss. That would have lost a lot of money. Microsoft still wants to stay above 319 for now, it seems. Just a hair above it, like 15 cents. Looks like Meta's catching a breather. It was down 3.3, now it's 3.0. That's a pretty start to a bearish candle. Still got to get red and then hammer through the low. A hammer through 319 would be ideal. How is Tesla still up? Didn't it have a really good pre-market? Let's see. Yeah, I mean, it had a decent pre-market toward, or no, it had a decent rally going into Powell's speech and then pulled back. So it had a really, really big run up. So that's why it's still up. But now it's only up 0.3% versus, I think it was like 1.7% earlier. All right, Microsoft's finally giving in to that 319 level. Again, I want to see this down to 318.20, the after-hour lows yesterday, but let's see if we can get there first. Definitely trading with the trend, which helps. Still red on Nvidia. 3.3%, and Meta's really bad. 3.6. But you are seeing a little bit of support under 319 from Microsoft, and Tesla seems to have gone up a tad. Yeah, that demand zone was your support at 407.50. Oh, that's Netflix. For Tesla, it doesn't have a demand zone close. Seems like every time Microsoft's hitting this 319.75 level, it's pulling back. All right, these are going at 250. I'll take my chances. Got a fourth one at 252. So now my trade price is 256 for 4 of them. Yeah, it's like tagging 320, but then pulling back like 25 cents, 30 cents lower. right at 320.01. It's still kind of getting rejected there. All right, there we go. A little bit above. All right, I think I'll add one more position. Since it's stalling out right over 320. No, maybe not. IV's coming down. Looks like Meta's improving and Nvidia's improving too. So the market leaders are rising a bit at least. Tesla's back up 1.3% now. Markets are still having a really tough time with Nvidia and Meta. All right. Well, we're not really getting much action right now, so I think I'll cut the stream. Stop loss for these orders will be at 230. I'd like to see it again. My goal for Microsoft would be at 318.20, but I might say like 318.50 just to cut it short. And then again, stop is at 230 for the contract. So yeah, that's all for me, and I'll catch y'all on Monday at 9:30. See everybody.